Dear students, welcome to the massive open online course. Today we are going to discuss the topic called revenue expenditure. My name is Dr. Milton Devadayu, Assistant Professor, Department of Public Administration, Madras Christian College. Before we are getting into the actual topic, just I would like to recall what we discussed during the earlier session. We were discussing about the execution of budget, under which we discussed how budget is executed or how budgets will be executed. We also discussed about the role of Ministry of Finance, what is tax, what is non-tax. Also we discussed about Consolidated Fund of India and so on. Today we are going to discuss such an interesting topic called revenue expenditure. What is revenue expenditure? Before getting into the topic, just I would like to tell you, under the government budget there are two important components. First is revenue budget and second one is capital budget. Under revenue budget, again there are two important subheads. First is revenue receipts, second is revenue expenditure. Likewise for capital expenditure, capital budget, capital receipt and capital expenditure is there. Today we are going to discuss about revenue expenditure. Before getting into the actual topic, just I would like to give you outlook about what is revenue budget means. Any public budget will include source of revenue and expenditure. See, any public budget definitely will have these two things, revenue receipt and revenue expenditure under revenue budget. Without which it is not possible to create a revenue budget. A revenue budget is a statement of the government's anticipated revenue receipts and expenditure for a fiscal year, which means revenue budget means government will anticipate what is the receipt, revenue receipt and revenue expenditure. Revenue budget consists of revenue receipts of government, which means revenue from the taxes and other revenues, and the expenditure made from these revenues. See, one hand government will anticipate the expected revenue as revenue receipts to the government. How this possible? Revenue comes through various sources like taxes, from the dividend amount, from the shares from the public sector enterprises. At the same time, responsibilities of the government is to spend money for the day-to-day businesses, for the day-to-day in order to meet the day-to-day expenditures. The revenue budget is for revenue items that are recurring and non-redeemable. See, the revenue which comes from the various sources, it is recurring, which means probably if it is interest, government can get interest on month or yearly basis. At the same time it is non-redeemable, they need not to pay back. The government's revenue budget includes revenue receipts as well as expenses that must be fulfilled with those receipts. As I mentioned earlier, government budget will have two important components under revenue budget. See, first one is revenue receipts and the revenue expenditure. Revenue, the annual income collected from the taxes by the government as a result of its sovereign powers. Government has a sovereign power to collect the taxes. Taxes are the main source of income for the government, direct and indirect taxes. through which government collects money from individual as well as from corporate, as well as for if they are selling any product, something called sales tax will be there, customs, excise duty will be there. So these are all major source of the revenue for the government. Typical revenues include individual and corporate income taxes, payroll taxes, sales tax, excise taxes. So these are all few examples where government will be able to collect money that is considered as a revenue receipts for the government. By having these receipts, by having these revenues, government will be planning for their expenditure. Sometimes this expenditure may be within the collected revenue, or sometimes it may go beyond the collected revenue. Maximum time it goes beyond the collected revenue to leads towards to deficit. Government typically raise two types of revenue, taxes and non-taxes revenue. So these two types of sources called, first is taxes, second is non-taxes revenue. These are all the two important sources for the government to make the revenue. Okay, now we will discuss about what is revenue account under the revenue budget. The revenue account reflects the government's current receipts and the expenditure that can be fulfilled with these receipts. See, one hand revenue will be there, on the other hand there will be expenditure. So to maintain all those things, that is called revenue accounts. The income of the government, the expenditure of the government has to be maintained properly, that is called revenue accounts. The revenue receipts are government income receipts that citizens are unable to reclaim from the government. See, being a citizen, all the people, those who are living in India, either directly or indirectly, they are paying taxes to the government. As I mentioned, taxes are the major source of revenue to the government. See, if I am paying income tax for the salary which I am getting from the institution where I am working. So, how to pay income tax to the government, which I will not be able to redeem. So, income taxes are the major source for the government. These two important components which is very much important under the revenue account. Okay, now we will discuss about what are the components of revenue budget. And there are three important indicators or components which is there under the revenue budget. First is expenditure, second is revenue, third is deficit. We all know what is expenditure, what is revenue. Deficit means if something goes, if my expenditure goes beyond, over and above my income, that is called revenue deficit. Under which there are two important parts under revenue budget is revenue receipt and revenue expenditure. Just so far I am giving you outlook about what is revenue budget and what is revenue receipt. In the forthcoming slides I am going to discuss you about the revenue expenditure. Okay, now we will move on to the other topic called revenue receipts. Here the revenue receipts are those that do not produce any liabilities and do not result in a claim against the government. Revenue receipt means it is revenue to the government, so which will not produce any liabilities to the government, also which do not result in claim against the government because it is income to the government. Revenue which need not to pay again, whatever amount government is collected, government need not to pay that amount back. So, for an example, tax revenue like customs duty, corporate tax, income tax, excise duty, service tax, these are all revenue receipts. Once it is given to the government, it is not redeemable by the individual. So, government need not to pay back. This is called revenue receipt. Revenue receipts do not directly influence the government's assets and liabilities are referred as the revenue receipts. Revenue receipts means it is income to the government. So, this revenue receipt will not, do not directly affect the government's assets and liabilities. There is no role for revenue receipts to play in the government assets as well as liabilities, because government assets means it comes under capital expenditure. Likewise, for government liabilities also, which will not comes under revenue receipts. Taxes from the state public sector undertakings, grant, other sources of current income are well included in revenue receipts. Taxes which comes from the public sector undertakings from the state government, also grant, other sources of current income are all included in revenue receipts. If they are giving any loans, so that they will get a interest for that loan, this comes under revenue receipts. Revenue receipts do not include the debt or loss of government assets. At the same time, revenue receipt will not include any debt or loss of government assets, because these government assets particularly will be dealt under capital expenditure. So, this any debt or loss of government assets which will not comes under revenue receipts. Okay, let us say if government is invested some amount of money for infrastructure development or some money for to establish new public sector undertaking. So, if this public sector undertaking is performing really well, means this profit comes under to the government, or if they are not able to produce the expected outcome from the public sector enterprises, which means it is a sick public sector enterprises, through which they will not be able to generate any revenue. Probably this may lead towards to the loss. At the same time, for the if it creates any debts, this will not affect the revenue receipts. In fact, this comes under the capital expenditure. Tax revenues are the most important components of revenue receipts, which have been divided into two. First is direct tax and second is indirect tax. So, for any government, any budget, be it a state government or central government or union territory, taxes are the major source of revenue for the government, under which there are two categories in it. First is direct and second is indirect tax. Direct tax, if you are paying a taxes to the government directly, that is called direct tax, and indirect tax, if you are paying indirect tax to the government. For example, if you are just purchasing any goods from the or any material from the market, you will be paying along with the cost price, along with that you will be paying the tax amount. For example, if you are purchasing pen worth of 100 rupees, so after adding the tax, if it goes 120 rupees, means that 20 rupees is considered as a tax. This is indirect tax. Non-tax revenue, recurrent income generated by the government from the sources other than taxes. So, government will be able to get revenue not only from the taxes, also from the other sources of revenue. See, these other sources of revenue, recurrent income generated by the government from the sources other than the taxes, this will be recurrent. For an example, if central government, union government gives loans to the any agencies, state government, from that loan they will be able to make money, that is called interest. This interest can be given month on month or once in a year. So, it recurrence, it happens every month, it happens now every year. So, this is considered as a non-tax revenue. If a receipt meets the below, it is considered as a revenue receipt. See how some receipt can be considered as a revenue receipt. If this receipt meets these three things, first one is should not expose the government to any risk. The receipt should not impose government to any risk. Second is tax levied by the government is called revenue receipt. Any taxes levied by the government is called revenue receipt. Okay. If a receipt meets the below, it is considered as a revenue receipt. So, how any receipt can be considered as a revenue receipt means it has to meet three important points. First is should not expose the government to any risk. See, the receipt which should not impose government to any risk. There should not be any risk involved. That is called revenue receipt. If risk involved means, what will happen? If public sector undertakings, if they are not able to make any profit, it directly affects to the asset, which means capital expenditure. So, point number 1. Point number 2 is taxes levied by the government is called revenue receipt. Any taxes, whether it is direct tax and indirect tax levied by the government, it goes to the treasury of the government, which will be considered as a revenue receipt. Third is non-decrease in the assets, so that there should not be any decrease in the asset, will not be considered as a revenue receipt. It has to has. It consists of money earned by the government from taxation as well as non-taxation source. So, it should have both tax as well as non-taxes of the sources to the government is considered as a revenue receipt. What are all the taxation? See, taxation such as excise duty and income tax, these are all considered as a taxation, and non-taxation such as dividend income from any shares, if union government or state government, if they have taken any shares from any of the enterprises, they will get dividend from the money invested from the organization. Second is profits from the public sector undertakings. Next is interest receipts. If they have given any loan to any of the agencies or any state government or any union territory through which they will be able to get interest, this will be considered as a non-tax revenue. These revenue receipts are non-redeemable and are divided into two groups, tax revenue and non-tax revenue. Okay. We'll have an elaborate discussion on what is tax revenue. See, tax is a legal requirement that individual and business pay to the government without expecting any direct benefit. You cannot see any budget without having a tax, direct and indirect tax, because taxes are the major source of income for the government. See, these taxes, it is applicable for individual as well as for corporate. For individual, it is considered as a income tax. For corporate, it is corporate tax. Being an individual, if some individual able to make a lakh rupee or 2 lakh rupee, 3 lakh rupee per month, based on the slab for the year, they are liable to pay the income tax. But corporate means there will be a number of people will be working, they will be able to make more profit, that profit which will be considered into crores, they will be able to make profit in crores. So, that is called corporate tax. If being an individual, if I am earning this much of money, I am supposed to pay my income tax for the money I earned for the year, likewise for corporate. So, point number 1. At the same time, whatever tax I have paid to the government from my income, I cannot expect any direct benefit from the tax which I have paid, but it will be discussed in the revenue expenditure, how these taxes will be spent. Second is, it is imposed on the people. See, direct and indirect taxes both are imposed on the people. So, that is why taxes plays such an important role in the budget. Examples: income tax, sales tax, service tax, excise duty and customs duty. If some of organization or they are manufacturing some product and they are exporting to the foreign countries, and the same times they are importing from the foreign countries, customs duty will be applicable here. Likewise for service tax, if I get any service from the industries, I am liable to pay the service tax. Likewise for sales tax, likewise for income tax, likewise for corporate tax. Tax revenue has been the principal source of government funding. See, any government, be it a union government or state government, the revenue which comes from the tax is considered as a principal source of revenue for the government. Based on that only government budget will be prepared. Those who earn income such as wages, salaries, rent, interest and profit are subject to income tax. See, Being an individual, I cannot say that this is my hard earned money, why should I pay tax to the government? Because I am the so-called citizen of this nation. I am supposed to pay my income tax to the government from my earnings. There are slabs. Likewise for profit for the corporates, the tax levied on selling the goods is called the sales tax. So, if any company, if they are selling their goods to the public, so that they will be add taxes for that. Being a consumer, I will be pay actual cost of the product, and the same time along with the actual cost I will be paying the tax. If the product value is 100 rupees, the worth of product is 100 rupees, if they are adding tax some 12%, if I am paying 112 rupees or 118 rupees or 120 rupees, this amount is called as a sales tax. This is indirect tax. When tax is paid for the service is called service tax. Tax paid for the manufacture of goods is an excise tax. So, if I am getting any service from the enterprises or be it a public or private, if I am paying the taxes for the service which I am used, that is called service tax. See, the tax paid for the manufacturing of goods is an excise duty. If organization is paying the tax for the manufacturing of the goods, it is called the excise tax. For the import and export tax, it is paid called customs tax. Okay, I would like to continue from the sources of tax revenue. These are all few sources: corporation tax, income tax, customs tax, union excise charges, service tax, GST. GST, it is well known tax because we have been paying this for almost few years. So that these are all other important sources for the revenue through taxes to the government. Now, we will discuss about what are the other non-taxable sources for the revenue source for the government. Non-tax revenue is recurrent income earned by the government from the sources other than taxes. This non-tax revenue source, it is a recurrence source of the revenue to the government, because it is not the revenue which will not comes from the taxes. From where this money will come then? See, interest received by the government. If the union government, if they have given loans to the state government or any agencies, out of which, let us say if they are giving 1 crore rupee, out of which if they are able to generate the interest for the amount which is given as a loan, this interest can be monthly interest or can be half-yearly or can be yearly interest. So, this is considered as interest from the amount given as a loan. Second is fee received by the central power authority. So, wherever fee is being collected, so that this fee is considered as a non-tax revenue for the government. Then fee for the recurrent services, it is a tax like mandatory contribution. So, if government is conducting any examination, so for that if they are able to, if they are collecting fee for that examination, so that this goes to the kitty of the government, then it is considered as a non-tax revenue sources for the government. Likewise for license fee, if government, if you are constructing a factory, if you are setting up a factory, for that you have to get a license, for that you will be paying a license fee, this comes under this sources of non-tax revenue. Likewise for penalties and fines. Dividend, see dividend, if government is investing money on some of the enterprises, so that end of the year they will be able to get shares from the government, that is called dividend. Also profit from the public sector undertakings. So, government has lot of public sector undertakings like Maharatna, Navaratna and Miniratna public enterprises are there. From these enterprises, whatever revenue comes to the government, which will be considered as a non-tax revenue for the government. Now we will move on to the capital receipts. The capital receipts which indicate the receipt which lead to a decrease in assets or an increase in liabilities of the government. Either there will be a decrease or increase in the liabilities. This capital receipt which consists of these following points. First is the money earned by selling assets, that is called disinvestment. What is disinvestment? See, let us say if public sector enterprises, if government not able to run the public sector enterprises because it is considered as a sick enterprises, through which if they are not able to make any profit, they will try to sell this enterprises to the hands of private. That is called disinvestment. Let us say Air India. So the money which comes after selling the Air India, after selling the public enterprises, which will be considered as disinvestment. Likewise, if they are trying to sell partial ownership of LIC to the private sector, so out of which they are able to generate some money, right. So this will be considered as a disinvestment. Okay. Second, the money received in the form of borrowings or repayment of loans by the states. See what will happen, borrowings. So if the money which received in the form of borrowings, so during the deficit this borrowing takes place. So borrowings and the repayment of loans by the states. If state government, if they have taken any loan, what they will do is they will repay the loan. I am not talking about the interest, I am talking about the repayment of the loan, the amount, whatever amount is borrowed from the central government, again they will be paying back the full loan, full and final settlement. This will be considered as a repayment of the loans, comes under the capital receipts. Now we will discuss about repayable. See, under this repayable, borrowings, securities, provident funds and revenue funds are there. So borrowings, so whenever central government is giving a loan to the state government during the deficit in the state government budget, so that this money once it is been settled, called borrowings, this is repayable. Whatever money they have given as a loan to the agencies or state government, this will be comes back to the treasury of the government. Likewise, for if central government has borrowed money from the agencies like World Bank or IMF, they have to pay back the loan, they have to pay interest as well as the borrowings. Then securities, so that if government is the government bonds, central government is just pledging the bonds, comes under the securities. Likewise for provident funds, provident fund means so that government will collect provident from money from the fund from the employees. See, it is not necessary government has to repay the provident fund month on month or the next year. Not this provident fund will be paid immediately, but later part they are supposed to pay this money, but not immediately. Likewise for revenue funds, see, borrowings, securities, provident funds are the revenue for the government, but this money has to be repaid. It has to be repaid, but not immediately, but after some time. Second is non-repayable. What is non-repayable? Recovery of loans. If central government is giving a loan, if they are collecting back the loan from the state government, they need not to pay it back. Whereas first under repayable we were discussing about borrowings, which means union government borrows money from other agencies, World Bank or IMF, the borrowed money has to be repaid along with the interest. Here recovery of loans, central government, union government, if they have given any loans to the other agencies, other government or other countries, that money recovery of loans which will be considered as non-repayable. They need not to repay the money because already the money is given. We are just taking back the money. Now we will be discussing about disinvestment of the government shares. So as I mentioned, if government is decided to hand over the public sector enterprises to in the hands of the private or to the some other people, means so that the money which comes from that sales, which will be considered as the non-repayable because need not to pay, so that this goes to the government. This is non-repayable sources of the revenue. Students, so far we discussed about what is revenue budget, under which we discussed about revenue receipt and capital receipt. We discussed about revenue expenditure. I just given you outlook about what is capital expenditure. Under revenue receipt, we have discussed so many things. Importantly, we discussed about what is the sources of revenue for the government. Direct tax, indirect tax. Also we discussed about tax and non-tax revenue for the government. Repayable sources of the revenue and non-repayable sources of the revenue. In the forthcoming session, we will be discussing on what is revenue expenditure. Students, I would like to tell you about, kindly make a note of the following questions. First is about what is budget, under which second question is what is revenue budget and what is capital budget. Also, please make a note of what is the difference between revenue receipt and revenue expenditure. Likewise for capital receipt and capital expenditure. Thank you.